If you're thinking about buying a home in Folsom, California, there's one cost that surprises a lot of buyers after they move in: property taxes. Not because they're hidden, but because most people don't fully understand how they're calculated, what's included, and how much they really add to your monthly payment. Today, I'm breaking it down clearly and honestly, real numbers, how property taxes actually work in Folsom, and what you should know before you buy. Let's get into it. First, Folsom is located in Sacramento County, and like the rest of California, property taxes are governed by Proposition 13. This is important because it sets the foundation for how much you'll pay, not just this year, but long term. Under Proposition 13, your base property tax rate is about 1% of the home's assessed value. That assessed value is usually the price you paid for the home when you bought it. On top of that 1%, there are local assessments and bonds, which fund things like schools, parks, infrastructure, and public services. Because of those add-ons, the real property tax rate in Folsom usually ends up between 1.1% and 1.3% of the purchase price. Now let's translate that into real dollars. If you buy a home in Folsom for $700,000, here's what it typically looks like. At about 1.2%, your annual property tax would be roughly $8,400 per year. That comes out to about $700 per month, which gets rolled directly into your mortgage payment if you're using a loan. Buy at $800,000, and now you're closer to $9,600 per year, or $800 per month. At $1 million, you're looking at roughly $12,000 per year, or $1,000 per month. And that's why this matters so much. Property taxes don't feel that big annually, but monthly, they absolutely affect affordability. Now here's something many buyers don't realize. Your property taxes are locked in at the purchase price, not the market value later. If your home goes up in value by $200,000 or $300,000 over time, your tax bill does not jump with it. Thanks to Prop 13, your assessed value can only increase by a maximum of 2% per year, even if home prices skyrocket. That's why longtime Folsom homeowners often pay dramatically less in property taxes than new buyers living next door in the same model home. Now let's talk about new construction, because this is where people get caught off guard. If you buy a brand new home in Folsom, especially in areas with new developments, your property taxes can be higher than average, sometimes closer to 1.3% or even slightly more. Why? Because new communities often include Mello-Roos taxes or special assessments. These are used to pay for things like new roads, schools, parks, and utilities. Mello-Roos is not a fixed amount across the city. It's community-specific, and the only way to know for sure is to look at the property tax breakdown for that exact address. Two homes with the same price in Folsom can have very different tax bills based on whether they're in a Mello-Roos district or not. That's why I always tell buyers, never guess, verify. Now let's talk about what actually shows up on your tax bill. Your property tax bill usually includes the base 1% tax, local school bonds, city and county assessments, special district fees, and possibly Mello-Roos. It's all combined into one bill, paid in 2 installments, typically in December and April, unless your lender escrows it monthly. Now here's an important homeowner advantage many people don't use. If this is your primary residence, you can apply for the California homeowners exemption, which reduces your assessed value by $7,000. That saves you about $70 per year. Is it huge? No. Is it free money? Yes, and you'd be surprised how many people forget to file for it. Another big topic is property tax reassessment. Your property taxes are reassessed when you buy the home, you transfer ownership, or you complete major improvements that add value. Normal repairs don't trigger reassessment, but adding square footage, a major remodel, or converting a garage can increase your assessed value. Now let's talk strategy. If you're an investor buying in Folsom, especially for rentals or flips, property taxes play a major role in your numbers. Higher taxes mean higher holding costs, lower cash flow, and tighter margins. This is especially important for DSCR loans, where lenders look closely at expenses like taxes and insurance to determine loan eligibility. For owner-occupants, property taxes affect how much home you can qualify for. Two buyers with the same income can qualify for very different price points depending on property taxes, HOA dues, and insurance costs. That's why I never talk about price alone. Monthly payment is what really matters. Now here's the big takeaway. Folsom property taxes are reasonable for California, but they are not cheap, and they are very property specific. Most buyers should expect around 1.1% to 1.3% of the purchase price, higher for new construction, lower for older homes without special assessments, and predictable increases capped at 2% per year. If you're buying smart, planning ahead, and understanding these numbers before you write an offer, there are no surprises. If you're guessing, that's when problems show up later. And that's exactly where having the right guidance makes the difference. Whether you're moving in 9 days or 90, call me. I'm here to help you buy or sell a home, get the right mortgage, or fund your next flip or construction project. Click the link in the description to schedule a Zoom call with me today, and let's make it happen.